Hi, Clark Harvey, the BBQ mortgage guy, owner of First Rate Mortgage. I've been serving clients for over 22 years in the residential and commercial lending. Today, I want to talk to you about pre-approval versus pre-qualification. Those two words get used interchangeably often. And the word more commonly used is pre-qualification. What that really entails is someone calls on the phone and says, hey, I make this much money, my credit score is this, and I'm going to put this much down, and what's my rate going to look like, what's my payment going to look like, and all those things. Well, those are great questions to ask. However, the reality is to get a good answer is to provide all the documentation to support that, whether you're pulling the credit, whether you're, you look at all the income, the W-2s, the pay stubs, the bank statements, because that's what's going to have to be verified anyway. So we like to see those. So a pre-qualification would be just on the phone saying, hey, yep, you can do this. That's a pre-qualification. We haven't verified anything. That kind of gives you a basis, but the challenge is until we get those things, especially if you're self-employed, we want to look at the tax returns, any deductions, any write-offs that you have that we may be able to add back in, the income, and that's going to be more of a pre-approval. So you get a pre-qualification letter, pre-approval letter. Well, we want to really deal in reality. So client oftentimes says, okay, what does this picture look like? Well, it's a 1,000-piece puzzle. I've only got 2 pieces. Well, I don't know yet. I just need the rest of the pieces of the puzzle. And so with that being said, once we get those things, then we can verify all those things because the underwriter is going to need to see it anyway. And so we are going to pre-underwrite that. We're going to look at that, make sure it works well, look at the income, calculate it based on the loan type that you're doing, whether it's an FHA, conventional, USDA, VA, all those different types of loans. So they're calculated slightly different. And so we as the loan officer, that's our job, is gather that information, and we're going to verify all that. And oftentimes, just to make sure, take it to the next level if we need to, is to run it through automated underwriting. So every loan, we like to run through it, automated underwriting. And what that is all the information you give to us, how long have you lived at this place, how long you've been at your job, how many kids you have, do you have to pay any alimony, child support, do you have a note that's not on your credit that we need to take a look at and add that in the credit as well? Did you take out any new loans? And all those things make a difference. And so it's like taking all that information, what your income is, your monthly, and we run it through an automated system, and it will say whether we have an approved eligible loan, meaning based on the criteria that you've put in there, and if you calculate it correctly, then we have a loan approval, okay? Now, it's a pre-approval. Now, it still needs to be underwritten by an underwriter. They have to look at the income as well, all the same things we did as a loan officer, and verify those. And so, but we're pretty confident saying, hey, this is a good loan. We're not going to foresee any issues. So the important thing to do is to let us as your loan officer know everything, because it's going to come out. And if it's a hindrance, the last thing we want to do is say, hey, you're pre-approved to go buy this house, with this and this how it looks, and this is the payment and all these things, and then not be able to deliver that. So it's very important to tell your loan officer all the things. We're here to help. We're on your side. We want to do the loan for you. In fact, if we can't do the loan, we don't get paid. But we are going to tell you the truth, whether it's going to go or not. And if not, then we're going to help you get on the path to buy, to see what those issues are. So that's a pre-approval. And we can even take and do what we call a to be determined and send it into one of our lenders. They'll actually underwrite it as well. And then we have a code based on that. And so now we have an pre-underwritten deal. So now it's really just based on the title work, make sure the liens, and if there's any encumbrances on the property, that we get that. And also the appraisal has to be appraised for the purchase price. If not, there's some ways to still close on a house, even if it doesn't appraise for the purchase price. But just know that as long as meets all the criteria of that loan type and the underwriter and the lender, then we have a sellable loan. Then we have a loan that we can close on it. You get a clear to close, and you can sign the closing documents and close on the house. So that's taking a step further pre-approval. In fact, I just did one last week like that. Just ran it through and just to make sure, had some questions on it. It was kind of on the edge, and so I just wanted to make sure that it's good to go and what that looks like. So there's no surprises. Because like I say, surprises are great on your birthday and Christmas, but I'm telling you, it's not fun at the closing table unless it's in your favor, and it's just the way it is. So we want to make sure that you're happy. Why? Because we love referrals. We love happy clients because they come back, and that's how we stay in business. And they tell their friends and family. And that, working with Clark Harvey, the barbecue mortgage guy, or whoever your loan officer is, that you have a good experience. And it's a lot like the analogy, I've talked about this before, that I'm the pilot and you're the passenger. And my job as the pilot is to get you to your destination on time and safely, and to have a pleasant experience through the air. And if you don't, then you're probably not going to come back. But as a pilot, sometimes there are some turbulences. And that's why you have to tell your loan officer all the things it's going to come out so that we can address it. And to get you safely to your destination. So it's kind of like turbulence sometimes, where maybe they'll go up 5,000 feet or whatever to get out of that, some cleaner air and make it a smoother ride. And that's what we do. We get you landed there on time and safely, so there's no surprises. So that's kind of really the difference between a pre-qualification, someone just calling in and telling you the basic numbers. That sounds great. The pre-approval is taking it a step farther, and that's what I do as a loan officer. In fact, I don't let them go out shopping in a house without giving me all their documentation. It just doesn't end well. You end up wasting time, your time, the realtor's time. Nobody likes that. Our time, my team's time. And so the biggest difference is actually verifying all those things. And so that's why it's important to get that to your loan officer as quick as possible. Once we get those things, then we can issue a pre-approval letter. And I like to take it a step further, actually issue a pre-approval video that I go on and talk to the listing agent about the client. And I can't give specifics, but I will say, this is what I've done, verified the credit, and I've verified, income. I've looked at all those things. Everything looks fantastic. Their down payment is there, or whatever that looks like. And then send them a video saying they're pre-approved by this home. And if you have any questions, reach out to me. So that's what we do. Pretty simple. Thank you, and I hope that makes sense to you guys, and have a blessed day.
You've been listening to Clark Harvey, the barbecue mortgage guy. Clark is a licensed mortgage loan originator, NMLS number 240452, and his company, First Rate Mortgage, NMLS number 1172332. You can get a hold of Clark at area code 801-562-9100 or at his website at www.thebbqmortgageguy.com.